All right, so I think we should keep an open mind here. Um, it's been my assumption that we are in a bear market, and we have been, but I'm not completely convinced that the bear market still has further to go. So let me show you what I'm looking at. So first off, bear markets make lower highs and lower lows, and that's what's been going on here for a while. Here's an intermediate top, intermediate bottom, rally was not able to make a higher high, another intermediate bottom, another bear market rally, again not able to make a higher high. And I said at the time that the only thing that would change my mind that we were in the bear market was over and that we were in a new bull market would be that the stocks would have to make a higher high, and they did not do that. So this was a bear market rally, and then we got the next leg down, made this double bottom. But now I'm starting to see things that make me question whether or not the bear market is still has further to go. So the Dow is within a whisker of making a higher intermediate high, and that is not bear market action. Should not be making higher intermediate highs if we're in a bear market. Now granted, it hasn't done it yet, but this daily cycle is still fairly young. It's only, I believe today was day 23, and generally, even in a bear market, the first daily cycle is probably going to rally at least 30 to 35 days before it tops and moves down. This rally here ran about 40 days before it topped. So, with the Thanksgiving holiday tends to be bullish, and the month of December tends to be bullish. There is definitely the possibility that over the next 5 to 10 days that the Dow could come up and make a higher high. And then at that point, I want to watch the transports, and if the transports confirm and also make a higher high, then I think you have to shift gears and assume that the bear market, at least for now, is over. Again, let me stress that we don't have confirmation for this yet, but we've just got some things that are starting to develop that are not really looking like a bear market. Again, like I said, still kind of early in this daily cycle, within a whisker of making a higher high. That should not happen in a bear market. We've had some really powerful breadth thrusts coming out of this bottom. Again, a little bit unusual for a bear market. Hedge funds are net short for one of the few times in history. You have to wonder if all the hedge funds are net short. Are they gonna be right, or are they on the wrong side of the boat? Michigan consumer sentiment is as bearish, if not more bearish, than it ever has been before, and that is despite a pretty nice rally in stocks, and that's not generally how bear market rallies perform. Bear market rallies need to generate fuel for the next move down, so people need to get bullish, and that's what happened during this bear market rally. People got bullish real quick, and I warned people that was going to happen, and that would be the fuel for the next leg down, and it was. We came down and made another lower low, but that's not happening during this rally. Even though we've got a really nice, powerful rally in the stock market, people are remaining stubbornly bearish. So again, pretty unusual for a bear market rally. Bear market rallies need to create fuel for the next leg down, and we are creating no fuel for the next leg down. It's starting to look like we've just got everybody on the, everybody's thinking the same thing. When everybody's thinking the same thing, it usually means nobody's thinking. So it's very possible that just everybody is on the wrong side of the boat here, and yes, there is going to be a recession, but it may come later than what almost all of us were expecting, as in we may not start the recession maybe until the summer or fall of next year. So this may be all about a temper tantrum on the Fed raising rates and the rally in the dollar. And it's starting to look pretty convincing that the rally in the dollar may have topped. I think I covered this in one of my other videos. And if that's the case, then you've got the driver for this to for the bull market to resume and at least maybe retest the highs, maybe a marginal breakout before we start down into the real 4-year cycle low. So my expectation was that we were going to get an early 4-year cycle low in spring or summer of next year. So we would keep stair stepping down, and we would get that major low in the norm or in an early timing band early next year. But I'm starting to wonder if this isn't a half 4-year cycle low. Very similar to what happened in 2018. This was a half 4-year cycle low. At the time, I seriously considered that maybe this was an early 4-year cycle low, but turns out it was not. The market recovered, went up, made higher highs, and then we get the crash into the real 4-year cycle low. So as you can see, these swings are getting more and more volatile, and that may be what is happening here. Is that this is a half 4-year cycle low, a very volatile and scary move down, gets everybody on the bearish side, and then the recession comes later than everyone anticipates, and we get another move up. Again, like I said, maybe we get a marginal breakout, and then we get a really destructive and devastating move down into the 4-year cycle low in the normal timing band, which would be spring or summer of 24. So again, not confirmed. So two things have to happen for this to be confirmed. The first one, the Dow has to make a higher high. If the Dow makes a higher high above this intermediate top, then you've got to seriously consider that the bear scenario is wrong. And then if the transports also confirm and make a higher intermediate high, then the bear thesis is wrong. And we've got our confirmation that this cyclical bear is over and the secular bull is resuming. And we're not done with this yet. And again, the bull it was only 12 years old. That's kind of short. The last bull ran about 20 years. So that was something else that gave me a little bit of pause to think that we had started another secular bear, in that it seemed like the bull was a little bit short. I know Jim Rogers is expecting a final bubble parabolic blow off top. We never really got that. I didn't see the Dow or the NASDAQ or anything like that stretched 60% above the 200-day moving average. I didn't see every Tom, Dick, and Harry buying stocks, day trading stocks, thinking they were going to get rich. Basically, I didn't see that same kind of sentiment and behavior in the stock market that we saw in Bitcoin about a year ago at this top. And yes, it was definitely very frothy, but I don't think I actually, I really saw true bubble behavior, which suggests that this may just be a cyclical bear within a secular bull, the same as this and the same as this, and we may have further to go yet before that final top comes. So I think you need to keep an open mind that the bear market, cyclical bear market, may be over, and I've shown you the two confirmations. If we get them both, then you got to get on the other side of the boat.